discuss this, we're joined now by Peter Brown, Managing Director of the Irish Institute of Financial Trading. Peter, what is a currency war and how could it affect Ireland?
Well, what's going on here is the method that countries are using to try and reinflate their economies, particularly in the United States, where they're involved in quantitative easing. Now they're expected next week to do what they're saying is QE2, which is the second round of quantitative easing, which is basically printing money. And what tends to happen then is it deflates your currency. And people are worried that there's now a mood abroad by economies to all try to get their currency down as low as possible so they can export more. And this is what the currency war is about.
Mm-hmm. Now, the UK economic figures that we've just seen, they're better than we had expected. What does that mean for Irish exporters? Is it good news?
Well, I think the UK figures are a one-off. Right, and I think we'll see the effects of the budget towards the end of this year and in the first quarter, where I think the UK economy will weaken slightly. The UK also are involved in quantitative easing, so in the short term we could see that sterling weakens. But I think that further out I'd be quite positive about the UK economy, that sterling towards the second quarter of next year will start to appreciate.
And why is the euro trading so strongly when so many countries in the eurozone have debt problems?
Well, at the present, the debt problem is off the agenda. Now, the European Central Bank have taken a much more cautious stance on quantitative easing. So they're the other side of the coin, if you like, that the euro will appreciate what other economies do their quantitative easing. But the debt crisis in Europe is not a story that's gone away forever, and I think next year that could come back. So I think that the alarmist fears about this currency war, I think, could be offset by the fact that the euro has problems in its own regard with regard to the debt situation.
Peter Brown, thank you very much.
Thank you.